Hey there, I'm Mike Lamothe. And if you're a part-time trader who's juggling work, family, the markets, you know how tough it can be to quickly size up opportunities without getting overwhelmed. What if you had a custom layout that allowed you to quickly and consistently analyze the market and your stocks across multiple time frames, all while making it easy to manage your trades and your trading decisions? Well, that's exactly what I'm going to show you how to do today. And if you want to try out TradingView or grab any of the indicators that we'll be talking about, be sure to click the links in the description below. All right, let's dive into how my custom TradingView layout can save you time, reduce decision fatigue, and help you with your trading confidence. So to start off, we have layouts for the monthly timeframes of the major indexes, the weekly timeframes, the daily timeframes, and then a separate layout just for stocks that has other timeframes on it too. Monthly, weekly, daily, and even a 30-minute chart. Now, why have all of these different layouts? The reason why is because it gives us perspective. When we're looking at multiple time frames simultaneously, it allows us to see the forest, the trees, and the individual leaves, and we're able to more quickly identify when things are beginning to change, when things are okay, right? We're able to identify what's a pullback versus when the market is actually rolling over. That's why I like to have these time frames, and whenever I click TradingView, it all pops right up and there's nothing extra that I need to do. So let's start off with the monthly time frames of the major indexes. So the first thing that we're going to need to do is come up to this button right here, layout setup. You're going to click that and you're going to select number 6 and you're going to select horizontal. That's going to give you the same layout that we have right here. Now, my charts are already black. So in order to get this black chart, you're going to want to right click on the chart, go down to settings, and then you're going to want to go to canvas. For the background, you want it to be solid. You're going to want to select black. For the grid lines, I don't like grid lines, so I hide them. I turn them all black. For the crosshair, I like to keep that white so I can actually see the little crosshair when I move it across. Then for the watermark, I keep a very light watermark. I keep it at opacity 25, and that's about it there. The next thing that you're going to want to do, if you haven't done it already, go back to layout setup and make sure that crosshair and date range are selected. Now, for each one of these windows, you're going to need to select which index you want to put where. I like to have SPX up here in the upper left, then NASDAQ composite in the upper right, so IXIC. Over here, I like to put the Russell 2000, RUT. Over here, I like to put NYSE, which is NYA. Down in the lower left, I like to put the Dow Jones Industrial Average, DJI. And then over here in the right, because I like to trade growth stocks, I like to put the IBD 50, ticker FFTY, because it's a fairly decent representation of the types of stocks that I like to trade. So I have all that in these windows. Now, the only indicators that get added to this are right in here. So we have volume set to uh, moving average length 50. That's how you get that shaded area right there. And you want it to be colored based on the previous bar's close. Then add in a moving average, 12-month moving average, simple moving average. And then a 36-month simple moving average. You're going to want to do that for each one of these charts. Only SPX and DJI have volume on it. That's just how TradingView does it. Now, to make your life a little bit easier when you're going to create the monthly and the daily charts, start off by coming back up here where it says Manage Layouts, and you're going to want to click Make a Copy, and that's going to make a copy of that tab and everything that you just did. And now you won't need to start from scratch, right? So you'll be able to come right in here and then start to say, oh, you know what? Instead of having this be a monthly, let's make this be weekly. And then all you have to do for the moving average is just switch this. What was a 12-month moving average, I like it to be a 10-week moving average. So switch that up to 10. And then this down here, instead of 36, it should be a 40-week line. And then that's basically it for the weekly charts. You will need to do that for each one of these. And then once that's done, you're good to go. And what you need to be able to do is come back into this. So after you're done editing each one of these other layouts, what you're going to want to do is come back into the Manage Layout. So click that little drop down arrow there, and then you're going to want to rename it. And in this case, I will be renaming it as Weekly Major Indexes. So I'd save that. And then every time that I reopen TradingView, this is going to pop up just like this until I exit out, right? And because I already have my own copies of this, I don't need it. So I'm going to come back into here. I'll click Load Layout, and then I'm just going to delete that copy. Right, and get rid of that. Okay, so now you have versions of the monthly chart as well as the weekly chart. Now, here's something extra that I want to throw in, because when you're setting up each one of these layouts, every now and again, I find that I might be in a different layout. Say I'm looking at stocks, and then I flip over to the indexes. I might put in a ticker symbol here and forget, now I have, this used to be the Russell, but now I'm looking at Tesla. So part of what I thought would be helpful is to create a major indexes watch list. So in order to create that, all you have to do is create new list, call it major indexes, and I'll call this one 2, and then just add in the names, right? So you could put in SPX and IXIC, so on down the line. We don't need to go through all of them. They are all already right here. So if you ever lose your major indexes or you want to quickly add them to something else, it's just helpful to have a list for them outlined for you right here. Now let's look at the daily charts of the major indexes. So this one has a little bit more going on with it. The S&P 500 is a little bit different than the NASDAQ. And the NASDAQ is a little bit different than the NYSE. So let's go through each one of these. So let's actually expand the S&P 500 daily time frame and uh, see what indicators are here. So we have the 50-day, we have the volume, and it's set to 50, moving average length of 50, still based on the previous close, which is good. Here we also have a 21-day exponential moving average. We have a 5-day exponential moving average, a 50-day simple moving average, 100-day exponential moving average, a 10-day exponential moving average, a 200-day exponential moving average, and we also have distribution days. The distribution days are being flagged as these carrots right here, and it's showing us whenever there is institutional selling in the market, it's flagging that day. It's flagging days that are down at least minus 0.2% or more on heavier volume than the day before it. It's something that William O'Neill talks about in his book, How to Make Money in Stocks. And it's something that I found to be very valuable in figuring out, is the market getting too heavy? Is it getting too far ahead of itself? Are we getting ready to pull back, correct, or have a much deeper bear market? Here's the NASDAQ. So the NASDAQ also has the volume, all the different moving averages. It has the distribution days indicator on it. I could probably take that off, to be honest, because the NASDAQ doesn't have volume and it's not going to show anything if there's no volume. Now, there's two extra indicators on this chart that I find to be very useful. The first one is the new highs versus new lows indicator. This is taking all the stocks that are making new 52-week highs versus the stocks that are making new 52-week lows on the NASDAQ, and it's showcasing them for us right here. Well, what I've found is that the market has an extremely difficult time continuing to make new highs if the stocks within it are not also making new highs. And in fact, it has an even tougher time when there's more stocks starting to make more new lows. And we saw that right here, right? So with this whole green section, we have more stocks making new 52-week highs than 52-week lows. That changed on December 13th. And within a couple of days, prices are pulling back. It's a very simple indicator. That's why I like tracking it. I like tracking it here. I also like tracking it on the NYSE. I will post it down below. The other indicator that's on here is, it's called Market Navigator. This is one that Brandon Shapiro, AMP trader on X created. Well, what this does is it tracks the market school rules, market school from Investors Business Daily. It takes their rules and tracks them to tell you, well, how much exposure should you have in the market right now. I find it to be useful. I actually have my own method of figuring out, well, how aggressive or how cautious should I be? And I just color code it myself. And so you see all these color codes all over the place here. Now let's take a look at the Russell 2000. The Russell 2000 has the same indicators on it. Volume with the 50-day, but there's no volume. Maybe one day it'll start adding the volume and then it'll just miraculously show up. That's actually what happened with the Dow. Fingers crossed that they do that. But anyhow, the moving averages are all here. The exponential 21-day moving average, the 5-day exponential moving average, the 50-day simple moving average, the 100-day exponential moving average, the 10-day exponential moving average, the 200-day simple moving average, and the distribution days. And yeah, the distribution days could stay here just in case if they add in the volume at some point. For the NYSE has all the moving averages on it as well. The difference here is that it has the number of stocks making new highs versus new lows for the NYSE on it. And again, if you're interested in these indicators, just click the links in the description below. The Dow. The Dow has all the same indicators on it. It has the distribution days, and you can see just how useful this is. We started to see distribution days piling up day after day after day after day after day, and then we finally got that big break of the 50-day moving average right here on Wednesday, December the 18th. The IBD 50 has the same indicators on it as well. Now let's talk about the layout that I have for individual stocks. This one is fairly similar to what I had over in the layout for Deep View. If you want to go check that out, click the link in the description. But here is what I've got going on for TradingView. So the first thing that you're going to want to do is click this layout setup and go to 4. Now, when you click 4, it's going to give you a layout that is even. I like it to be staggered, where I give a little bit more room to the weekly chart and I give a little bit more room to the daily chart. And the reason why is because, well, those are the most important ones to me as a swing trader. If you have other time frames that are a little bit more important to you that you are taking action on, then by all means change it up. So I've got the monthly, the weekly, the daily, and the 30-minute time frames on here. The reason why, again, like if I'm taking a trade in Tesla, and the last trade that I took in Tesla was right down here. I've got my cursor on the daily chart down here, and you can see how you get the same crosshair on all the other ones just by making sure that you've got the crosshair checked off. What I changed on this one is another thing. You, you have just the crosshair checked off and the symbol checked off. That way, every time that you pull up another stock, let's say that you wanted to pull up, I don't know, Apple. Now all of them are showing us what Apple is doing. But well, let's go back to Tesla for now. So I saw Tesla consolidating between November 11th and over here on December 5th, and it started to break out on December 5th. By seeing how Tesla was across time frames, I'm able to quickly see that. Oh, well, let's zoom out a little bit over here. So I'm able to quickly see that, oh, you know what? Tesla's getting ready to break out to all-time highs. It's starting to break out above weekly highs. And even down here on the 30-minute chart, it actually was tightening up. The price action was tightening up down there. So there was multiple confluences happening all at the same time, this multi-timeframe confluence. And that's something that tends to lead to the strongest breakouts when we've got all these things going on. And when you have a layout like this, it makes it very easy to see everything at a glance. So what do we have on each one of these charts? Well, let's start up here with the monthly time frame. So the monthly is the easiest one. Again, we've got volume, and the volume settings are 50-day MA length. We have the 12-month moving average, simple moving average. We've got the 36-month simple moving average. We've added a relative strength line versus the S&P 500. It actually looks like we've got that on here twice. Let's get rid of one of those. All right. Just got more efficient. And down here, we have the net profit margin. This is one of those indicators that gets glanced at rarely. If you start to see that a stock has had an exceptionally long run and you start to see the profit margins dramatically increase relative to where it was, it could be the sign of a top. Well, that's what started to happen back here. If we hit the little replay button and go back to this point in time, well, what is that? That was 2021. You could see how rapidly the profit margins increased while prices were pushing towards new highs and starting to get a little bit top heavy. That happens at the end of the move. Price tends to precede what's actually happening with the company, with the stock. Prices are looking ahead. That's how come you could still have profit margins being great and prices start to decline. Now let's take a look at the weekly chart. So over here on the weeklies, what do we got? We've got the 10-week moving average. We've got the 40-week moving average. We've got volume with a 10-week moving average on it. We have this extra indicator here for earnings and sales. If you have, I recently have Deep View now, so I'm looking at all the earnings and sales over on Deep View. If you don't have that, this is a pretty good replacement for it, just to give you an idea of where earnings and sales are quarter over quarter, year over year for the stock that you're looking at. I'll include this indicator down below, even though personally I'm looking at it over on Deep View. We've got the relative strength line back on the chart. Here are the settings that I have for that. The price data label. This could be useful also if you're trying to roll your mouse over a particular week and see, well, where did price close for that week? Well, for where I've got it right now, it closed 40% of the weekly closing range, plus several other stats on there. Fairly convenient. Then there's this other one, Base Finder. That I believe is another free one that my friend Brandon Shapiro made. We'll include that. It replicates the pattern recognition that Market Surge has. It's pretty good at highlighting some bases. In my opinion, there's no substitute for your own studies and your own eyes. There's a few other pullbacks or bases that I would throw in here that I would count, aside from just this being a cup. I don't even know if I would call this a cup, but it is good at highlighting some sort of consolidation for you. And then we've got the relative strength line on here. On that, yeah, wow, all these duplicates of the relative strength line. All right, just get rid of that. Doing these videos, sometimes you're able to make your own charts a bit more efficient. So thank you. All righty. Moving right along. Now we have, now we're on to the daily time frames. Daily time frames, we've got the stochastics up here. I use stochastics to help identify when momentum is coming into a trade or going out of a trade. When the stochastics are turned up like this, it means that there's momentum coming into it. When the stochastics are elevated up here ahead of a breakout, especially when they're starting to turn up like this again, it's showing momentum coming in. That's one of the reasons why I like this trade so much in Tesla. back here. When the when the stochastics start to roll over like they are right now, that's a sign of momentum shifting and coming out of it, at least for now. Here are the settings that I have on the stochastics. Length 21, Y21, my average holding period. Then the percentage smoothing 4 and 4. I've got the same moving averages on here. Okay, here's another indicator that I have. This one is called the ATR trailing stop loss. Now, some people like to trail their trades with an ATR. For me, I use it as a danger signal. We'll talk more about danger signals in a moment. But what this is telling me, when price is above the ATR, it's a good thing. When it's below the ATR, it's not a good thing. Does it prompt an immediate action? No, but it is something that I want to bring awareness to myself. The settings that I have for it are 10, 10, and 1.5. And this is the 50-day moving average. Then we've got the relative strength line again. Got volume. We also have the base finder. It's good to have base finder on both daily and weekly charts. And you can see here too, it shows it a little bit differently than it did on the weekly. It's good to have both perspectives. But again, nothing is better than your own eyes. Turn that off. These diamonds. This is a custom indicator that one of our coaches made for us that shows us reversal patterns, or tends to highlight reversal patterns off of the 10-day, off of the 21-day. When it shows up, I like to start to look for potential pullback buys. Like right in here, that was a potential pullback buy. Down here, that was a potential pullback. Portfolio heat. Now, this is another very good indicator created by my friend Brandon Shapiro at AMP Trading. This one ties into the danger signals indicator that I had personally coded for my book, The Trading Mind Wheel. Now, rather than having a sell signal be based off of moving averages or ATRs or any one thing, what I found to be most useful is to have a series of danger signals that will tell me if momentum in a trade is starting to fade. What you see here is that it's showing Tesla has 9 danger signals today. Yesterday, Tesla had 13 danger signals. So what that means is that if you're in it, you might want to consider taking action. And it's the number of danger signals that show up are based on what you sent for the entry and the stop loss. So on this one here, I just set it up where I have Tesla at 362.10 with a stop loss of 347.90, and it calculated that based on where you entered and your stop loss, there are 13 danger signals right now. Both of those indicators are available for free, and yes, those ones are included in the description down below as well. I'll also include a link to a blog post that explains more about the danger signals. All right. Last indicator on this page here is this one down here. This is showing the percent daily range over the last 20 trading days. So, and for the style, what it's showing, well, when we have percentage range over 5, it goes green. Between 5 and 3, it's orange. And when it's less than 3, it turns red. My sweet spot for trades are ones that are orange to green. Those ones have more momentum. And seeing that visually right away, I find it to be very, very helpful. And finally, the 30-minute charts. Now, we've got the same moving averages on all these, but they're a little bit different. The difference is that you go into settings and you go into inputs, and rather than the time frame being from the chart, like if we come back over to the daily time frame, for example, and let's just click into any one of these, you'll see that the input is from the chart. You don't want that on the 30-minute time frame. Well, what I like the 30-minute time frame to show is the time frame to be from the daily chart. So that way it's all these moving averages are the daily moving averages. So this is letting me take the daily time frame and put it under a microscope to see, well, how is price actually behaving around the 10-day exponential moving average? Let's see. Bring it back to today. And so far, it seems like it's acting as a potential support area. Will it hold? Well, we'll have to see. But by having this kind of view of the chart intraday, I find it to be very helpful. So all the moving averages are set to the daily time frame. Now there is one additional indicator on here, which is the dollar volume. Uh, yeah, dollar volume. And this is set to show the average volume days 20, the alert multiplier 1.25. And the purpose of this is to show when prices above average for a particular point in time for the day, then it will turn blue. So over here, when price was falling, towards the end of the day yesterday, it was showing us that, hey, volume is way above average on that decline. So it's showing heavy volume pressure. When when the volume is either green or red, it's showing that, yeah, prices either up or down, but the volume is lighter than what it normally is. Now, something else that I think that is worth mentioning is that during the day, I don't have all of my indicators turned on all the time. And I also don't have all of my annotations turned on all the time because I like to draw all over my charts and mark them up. If I kept everything on all the time, it would be very, very noisy. So what I like to do is turn my annotations off, turn off these special indicators that I'm not using all the time, and have nice clean charts when I go to glance at them, just so that way I'm not adding any additional noise or bias when I'm looking at these things, and then layer on what I need when I need it. And that's how I hope to keep myself focused and able to flip through things very quickly and see where we're at. I'll even keep the lists closed on the side there, so that way I'm only looking at the things that I find to be most important right now as a baseline, as a foundation, and then layer on what I want to layer on as I'm doing my analysis. So if you have any questions at all, please reach out to me and I'll be glad to help you. Take care, much love, and God bless.